Even though fib retracements can't provide effective analysis after the chart has moved out of its range to new record highs or lows, it is possible to reference previous fib retracement levels to plot fib extensions and projections to cover opposition at new record high or low ranges. Here it is normal for the 0.236 level of a large fib retracement to not capture the upswing in the gap fill range. Once price peaks in the low 120s, it is possible to adjust fib retracement levels to raise the 0.236 level to approximate the gap up fill support, where another upswing is not unusual. As new record highs are reached, there is a familiar situation where a fib extension can be combined with a fib retracement, except in this case, areas of stronger opposition can't be narrowed down after the zero level of the fib retracement. Instead, retracement levels like 0.618 and 0.236 can be used for highly accurate validation of the fib extension. After a new peak at record highs, it becomes clear by early November it was possible to switch to a fib projection that could have projection levels validated near the gap. The goal for a more reliable fib projection would aim to have more levels line up with swing points before and after the gap up. A narrower fib retracement doesn't have a projection level align with the gap up level, but it still maintains contact with many of the same swing points. More importantly, it has the two-level contact the late October peak. Capturing the last clear downswing with a projection level normally improves accuracy of later fib projection levels at new record highs. This can be seen with better results with levels above 2 moving towards 2021.